What if I told you I knew exactly why you weren't making money when it comes to trading patterns? Or I could tell you how to increase your success rate about 50%. If you're trading futures, stocks, equities, Forex, I don't care. Listen up, because I'm going to break down exactly how I look at these patterns and how I follow them. You need to understand what continuation means and how you can apply the bull flags, bear flags, ascending triangles, and everything in between to your trading. Now, some of them look like BS and some of them are BS, but of course, I'm going to tell you how to spot the difference. Let's get to work. For the sake of the video, I am using TradingView. Just to let you know, you just go to Google, type in TradingView. It's absolutely free. So yeah, there it is. Now, I'm not going to really be using any indicators in this video either. I do want to use the 200 SMA, which is the last video that I went over to show you the overall trend of specific stocks, equities, Forex, and anything in between. But when I look at a chart like SPY right now, when I'm looking at this chart, I know that I need to be trading it and looking for continuation patterns to the upside. Why? Because we're making higher highs and higher lows. And I know that's really fundamental and really basic, but if you don't understand that, you're not going to understand anything else. What I'm going to do is go more to like the 5 minute, because I assume a lot of you guys are looking for scalping, but these rules apply on the higher time frames as well. So for example, the most recent trade that we were looking at was SPY breaking above all-time highs. Once you broke above, then you were kind of in the clear for more continuation. So when I look in here, I can go over a handful of patterns, bull flags, ascending triangles, and I'll try to cover all of them for you. So we saw a clear base at this period right here above highs, signaling that this was very, very bullish, in which you broke out. Now, what you were looking from past that point was more of like a bull flag. You even pull up the replay, you go back into here so we can actually see exactly how this played out. But this is exactly what you look for, right? You slowly are pulling back. You have that overall pattern that you're looking for. You want to see a break back above this little candle here, and then you're trading it either into highs and then trailing stops into wherever your next high goes. And so when we go, let this play out, we'll go to the 1X so we can let that play out a little bit slower for us. But as you can see, you slowly break out, and then boom, 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 you run into new highs, and eventually you pull back. Now again, when you're looking for these patterns, we're not looking for these patterns to just go continuation, continuation, continuation. Now you have to understand the time frame in which you're trading. So if I'm looking at the 5 minute time frame, I'm not trying to trade this, 30 points of upside. I need to respect the underlying move and how this is kind of going to play out and the implied move from that as well. So when you get a push from, 493.5 into almost 495, yeah, that's an overall great trade, and it played out perfectly from there. Now, what I wouldn't be looking for is something like this. So when I get rid of the replay and we go back in here, you can kind of see that we played out, we came down, and some people could have argued that you were trying to make a little bit of a bear flag down here. I'm not going to be looking to trade the downside, because why? You're clearly in an upward trend, you're above resistances, and you're trending to the upside. So you don't want to start counter trend trading. This is one of the biggest things and biggest issues that I see across the board. Now, yeah, you might have some instances like right here near the end of the day. If I go to a smaller time frame like the 30 minute, maybe you'll see it, right? So you come in, you can kind of see you're making a little bit of a bear flag. But where this becomes invalidated is you're drawing a bear flag at highs. So when you're doing that, you're putting yourself at a disability. Now, if I was going to try to go short on something, I'd probably go short on something a little bit weaker. I want to go on a name that hasn't been moving great. That's what I would want to be doing here. So I'm going to use an example like PayPal, something that has been moving inherently weak. Now, a lot of guys would, disagree with me and say it's a great trade to the upside, whatever it may be. But if you go to the daily, you can see PayPal has only been going down, and you're below your clear 200 SMA. So if I think the SPY is showing weakness, then again, I wouldn't want to short SPY. I'd want to go to a name that has inherent weakness. And if you look at a name like PayPal, you're coming right into resistance as well at that 200 SMA, and then you started to reject off that point as well. And so that's overall what I would be wanting to do. Again, you can see the difference. I would want to be shorting a name that has weakness rather than shorting a name that has the strength. But I also want to align this with the overall trend, because you can't be drawing bear flags while you're in a bullish trend. It just doesn't make any sense. Again, you can even go back to something like October and higher time frames. And this is one of the best examples that I show a lot of the new traders as well. We had that pullback from basically July all the way into October. And honestly, it's set up for one of the best runs here into the end of the year. But if you look at how this played out, it was one of the best looking bull flags that we've had in a long time. You bull flagged right into the 200 SMA, in which you bounced and buyers showed up immediately, leading you back into almost all-time highs. That's why you have to look for these specific trends and this type of style when it comes to trading. So I wanted to get that out of the way first. I wanted to make sure you understand when you're looking for bullish trends, right? And you're looking for bull flags, ascending triangles, inverse head and shoulders, things along those lines. You want to understand where you're at. I'm not looking for an inverse head and shoulders necessarily at all-time highs. I'm not looking for a head and shoulders at all-time lows, because those are usually reversal patterns. And I'm not looking for an ascending triangle at lows, because that's typically a breakout signal or a continuation pattern, right? You're not going to get a breakout or a continuation pattern that's the opposite of how the market's moving. That's just unlikely and doesn't make too much sense. Now, occasionally the pattern might play out, but again, you want to put yourself in the best position to win. That's something that you're always going to hear me say here on the channel. Put ourselves in the best position to win. Let's go over a little bit more. Now, I want to go more on higher time frames here as well, because in my opinion, I make the most money for myself on swing trades, and I would love to hear what you guys say as well. So when I look here, you're making a clear flat top, and all these you can Google, and I recommend that you do research everything that I'm saying, so you can, make sure that I'm not just, feeding you a load of crap. So what you had here was higher lows being made here on NVIDIA on the daily chart, and this is probably one of the best trades that we've had of the year. I had a false breakdown, but you were still in that pattern with a flat top up top. This is the ascending triangle, okay? And so what you're looking for here ultimately, which you never really got until recently, is the breakout, the retest, and then continuation to the upside. That's ultimately what you want to see. You can also use this on lower time frames, and I use it very, very frequently. And I can even show you a use case that we used this past week. But as you see this play out, let's go to 3x. You can see that you start to break out, and once this happens, you start getting immediate volatility, right? You see how you were just pinching, getting less and less movement. But once you break out, look how quick that really comes. Sometimes you won't get the retest, but look at the movement that came after it based on that pattern. Now, obviously, if you don't get the retest, then you just got to zoom into, smaller time frames and look for retests within those levels. But a great example of what happened here on Friday that just passed was right here on NVIDIA on this smaller time frames at the 5-minute. We posted this in Discord and on Twitter, but you can see what happened here. You had your ascending triangle forming out. You had your flat top right here near the resistance. And what you're looking for is a little bit of a range in what you're touching. It doesn't always have to be perfect, but what happens here is you break out. And if you go to the 3-minute, the 1-minute, you'll see you get the break, retest, and then continuation to the upside for another almost 13 points of upside room. And again, that's what you're looking at. Now, obviously, if we have a daily ascending triangle, like we go back and we look, you can see that daily ascending triangle, the measured move is a lot more. Like you got 160 points of upside. Now, if we get a 5-minute ascending triangle, the measured move might only be 16 points. So there's going to be a bit of a learning curve within there. But again, it's important to identify exactly what you're looking at there. Now, obviously, in this video, I'm not going to be able to go over every single pattern that's out there. My favorites personally are the bull flag, the ascending and descending triangle, bull and bear flag, and head and shoulders overall. Besides that, I don't focus on too many other things. You could even include bull and bear pennants, but they're kind of the same thing as bull flags. Just a little bit different when you look at the higher lows and lower highs that you make there. But one of the best indicators and best tools you can use combined with those patterns is one of my favorite things ever. And yes, you guessed it, it's volume. When it comes to identifying breakout patterns, volume is going to be your best friend. I'm going to show you exactly what I mean, because what you typically get is low volume throughout the pattern, and then once you break out to get that confirmation, it's usually met by high or increased volume. And here's exactly what I mean. So again, I want to go back over NVIDIA here. So what we can identify here is as you're trending in this range, and this was for a few months, you can spot a few things here on the volume chart. Let's just bring this up so you can see a few things that are happening here. We had kind of declining volume and really stale volume. So you can see that your volume really capped out usually around the 50 mil mark. You very rarely had multiple daily candles above this range, right? You'd get the occasional, rejection, bounce off of a key level, rejection, etc. Now, what changes is when you break out right here. It's met by consistent increased volume or matching those highs, right? So you see multiple days of breakout volume right there, even though it's not the highest, but it's met and continued there as well. So when we zoom back in, you can see how it's playing out there. Now, again, we'll go back to that 5-minute, for instance, here. We'll zoom back in. We'll look here as well. We'll bring the volume back up, make sure we stretch it out, because again, you have to see exactly what we were getting there as well. And again, I haven't even tested this yet. I just already knew it was going to be there because NVIDIA gets a lot of volume, especially on those breakouts. And so when you look here, look at how it plays out. You have that ascending triangle. You're getting low volume. It's declining volume the entire time. And then what happens on the breakout? As you break out, increased, and it just keeps going up until you reach those highs. And then eventually sellers step back in. volume is going to be your best friend. Now let's go back to SPY. Let's look at what's happening here. Now again, we can identify exactly what's happening here. Now it's not always going to be perfect. It's not always going to be exact. But again, you can still see, even throughout this pattern, you get your initial selling candle right here, which was decently with some volume coming back down. And then you get a little bit of breakout and then continuation as well on a smaller time frame. So again, it's going to work out. Now, what I will say is you're going to get better follow through, better signals on higher time frames. Higher time frames are always going to be better looking charts. Now, the catch-22 with that is obviously it's going to take more self-control to trade those higher time frame charts. Now, everything I'm saying too goes for the inverse, to the downside, or whatever you're looking for there. I can go over Boeing. Boeing's probably one of the best examples that I could ever show you for downside movement. And I do want to, just for the case and sake of the video, show you some potential downside movement that you had. So when we look at Boeing, we can look at a number of things. Now, one of the biggest things I was looking here on Boeing was potentially how this was playing out too when you were getting a little bit of a descending triangle. So when we go into Boeing, we can see the descending triangle. We're here on the hourly chart. So you can see volume is greatly declining. You can see exactly what's happening, slowly going down. But as you start to get the break, you get a little bit of increased volume and selling, and then the next day comes out and it's massive selling. And you can see the big amount of sellers start to step in, and you can see the whole dynamic of Boeing has changed. You get massive selling to the downside, confirming that type of movement. You can even see this on smaller time frames as well. You can also go into something like Apple. This is another great for instance. Now, Apple, it's going to be inherently strong at most times, but when you go to something like the 15-minute, you can see these examples really point out also. So again, here's a bear flag coming back into our key levels that were mentioned here from the newsletter and everything in between there. So you can see we kind of have this ugly flag. It's really thin, but you can still see how we're just kind of retracing back into it with the overall structure. We bring up the volume as well. You can see very low declining volume as that's coming in, and then increased volume of selling all the way through. That pushes you back down, ultimately down into 185 from those highs of 192. So you can definitely see how the story is being portrayed and the signals are being given from each of these separate indicators also. Now, before we let you out of here, there's a few things that I want to say. There's some indicators that will help you with this when it comes to VWAP, maybe the 90 MA, and I have videos on those. But I do recommend when you're learning these, try to learn it without those indicators. Those should be used to assist you and help you down the line and give you more confirmation, because you want to learn this just with key level, supply and demand, and that's all. Once you have that foundation, you're going to have more confidence when you use those indicators on top of it. You don't want like more confusion with it. You don't want to have to second guess yourself and say, well, this isn't lining up and this isn't lining up. Because at the end of the day, volume is going to be your best friend. It's the best indicator that there is, and it never will lie to you, right? So sometimes you might get, choppy movement through the VWAP, or the 90 MA might not be respected, but volume will be very consistent and always tell you the real story behind the stock and the movement that's being portrayed with that stock. If you have questions, comment down below. Subscribe for more content.